Stanley Druckenmiller has said that his number one advice to young people is that they must not invest in the present. He says that young people should know that the present is not what moves stock market prices. Instead, it's change that moves them. He wants young people to think history is gonna win. Once inflation gets about 5%, it's never gonna come down without a recession. Stanley believes that a recession is about to happen, and before we go into detail, please remember to like this video and subscribe to be aware of any future videos. Also, hit that bell notification icon so that you won't miss a single upload. Going back to the video, Mr. Druckenmiller says, and I quote, "Depending on who you listen to, we have about $1.5 trillion to $2 trillion of excess savings right now. It may take some time to work through all of this, but given the extent of the asset bubble and the destruction in the markets, given what's going on in Ukraine, given the zero covert policy in China, he doesn't take a lot of comfort from all of this. So he strongly assumes that we're going to have a recession sometime in 2023. Mr. Druckenmiller says he just doesn't know whether it's going to be in the early part or the later part of that year. He worries that one of the most challenging things for him right now is maybe it says something about his dysfunctional personality, but he has always made even higher returns in bear markets and bull markets. But the way he did it was pretty much ignoring equities. He says you should take them off the table, buy bonds, buy treasuries, and go home. Going on to describe that he has never been presented a cocktail where you have 8% inflation. You think the economy might weaken and bond yields 3%. It's an analog with no precedent in history because we've never had central banks with this situation. He brought up Europe and the US as examples. The prior has negative rates with 8% inflation. Meanwhile, the latter has never had anything like this. So you can't always get into black or white. He calls it an art form to invest from cycle to cycle. He says that you have to constantly innovate and not just be a slave to past models. You can't build over $2 trillion in wealth in purchasing power and then take $1 trillion out of it like it doesn't matter. He says that he also has high frequency signals and there is a strong correlation between crypto and the Nasdaq. He doesn't think it takes a genius to figure out why. He provided some insight that he's looking at a few indicators that let him know that what Charlie Munger and Bill Miller say about crypto, he is also sympathetic to. Stanley says it would be a surprise if blockchain isn't a real force in our economy 5 to 10 years from now, and not a major disruptor with companies that will have been founded between now and then. He remarked that it'll do very well for them to challenge things like our financial companies and do a lot of disruption. That is why he finds crypto interesting. He's uncertain why, other than Nasdaq, type risk play takers are the ones that send to play in Bitcoin and curmudgeons that are gold bugs and want the world to fall apart playing gold. But there's no question he has witnessed this, and this has gone on for long enough. He stated that if investors believe we're going to have irresponsible monetary policy and inflation going forward, it's in a bull phase that investors want to own Bitcoin. However, it's in a bear phase for other assets if you want to own gold. Stanley thinks he just articulated the reason, but sometimes he doesn't care because this is going long on enough. He started to believe what he was observing, and for sure, he thinks we're going to have an inflationary bull market. He stated, and I quote, "I'd want to own Bitcoin more than gold, and if I thought we're going to have a bear market, a stagflation type thing, then I would want to have gold." This doesn't mean I'm going to believe that in a year, but that's my assumption going forward. What contributes to this is what I've observed. That's about 85%. While the other factor that comes into play is the type of investor. Whether or not you're an over-the-counter or a FANG type investor, so long as they believe inflation, they tend to be younger and they want to play Bitcoin. As a joke, he mentions that based on his observations, he thinks that old curmudgeons want the world to fall apart because they don't own Bitcoin and that they only own gold. He went on to say that if he was a tech investor, he would certainly be learning. He said that there was the internet wave followed by the cloud wave, and now he would certainly be looking into blockchain very deeply, into the possible disruption it might take. However, he still believes that the fundamentals are fundamentals. When companies are losing money, capacity is always going to shrink and their margins are going to look much better. He estimates that in 3 years' time, when companies are over-earning, their margins are going to come down. He thinks all that stuff will be out there, and the great thing about his original mentors was that they made him focus on what moves the stock price. This brings us back full circle into his number one advice to young people. It is, do not invest in the present. The present does not move stock prices. It is always change and how this change happens. His last bit of advice is for investors like you and me. It's this imaging practice where he says, and I quote, "I want you to try and envision a different world in a year and a half from now, where these security prices would trade versus right now. Given the world you envision, that would be my number one advice to a young person getting in the business." This means that we have to consider the possible changes that are occurring in the real world. Anyway, we hope that this video provides an in-depth insight on the future of crypto and how you could be a part of it based on what Stanley Druckenmiller advises young investors. Again, be sure to subscribe and hit the bell notification icon for future videos. Good luck out there!